Welcome back to Quantreef. ETH is trading around 1877 right now, sitting almost exactly on its 4-hour resistance and its 61.8 fib retracement at the same time, which is exactly the kind of spot that makes a chart interesting. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, the fair value gaps, positioning, and where this likely wants to go over the next several hours. Let's get into it. Price is at 1877, and the trend and structure score sits at 63.3, which leans constructive but isn't overwhelming. The regime reads risk on, and behavioral sentiment is running hot at 70.9, so buyers have had the upper hand recently. But structure strength on the sheet is tagged low, meaning this isn't a clean, confirmed trend yet, it's more of a grind higher into resistance than a breakout. Price is above the session VWAP at 1866, which tells you today's average trade has been bought, not sold. It's also sitting between the two anchored VWAPs from the recent swing, the low anchor at 1861.52 and the high anchor at 1881. Being pinned right under that upper anchor is worth watching. If price accepts above 1881, that's a shift toward genuine value migration higher rather than just a wick. The liquidation map shows the bigger wall just overhead, at 1887.60, carrying roughly 44.7 billion in notional and a 75% chance of getting tagged within 24 hours. That's the magnet right now. Below, there's a second pool at 1855.60, about 34 billion in size, with a 67% reach probability. Upside liquidity slightly outweighs downside, 57 to 43, which is why price has been grinding up into that wall. Markets tend to run at resting stops before they decide the next real direction. Nearest resistance lines up almost on top of price at 1876, with a stronger ceiling at 1898 above that. Support sits at 1855 and then 1846 on the 4-hour. Given price is already leaning on resistance and the upside pool is bigger and closer, that level probably gets tested first. A clean break and hold below 1855 would be what flips this bullish red. Right above price there's a daily bearish gap between 1875 and 1894, already about half filled, and with an 89% historical revisit rate, that's the immediate magnet. Above that, a 4-hour gap from 1893 to 1899 is completely unfilled with an 87% revisit tendency, so it could pull price up over the next week. Further out, a daily gap near 2030 to 2055 has only a 14% revisit odds, not a near-term concern. Downside, there's a bull gap back near 1650, but it's far away and low priority for now. The active swing runs from the low at 1847 up to the high at 1936.72, and price is sitting inside that range, right at the 0.618 level near 1881, only about 0.1% away. That's effectively acting as resistance right now alongside the VWAP anchor. If it clears, 0.5 and 0.382 sit higher at 1892 and 1902. If it rejects, 0.786 near 1866 lines up with the session VWAP as the next cushion. The layered read is mixed on purpose. Volume and liquidity scores 74. Showing real participation behind this move, and institutional positioning is strong at 72, suggesting bigger players are leaning long. But relative strength versus the broader crypto market is weak at 36.6, meaning this asset isn't leading, it's following. Macro and volatility both sit near neutral at 50. That disagreement between strong institutional flow and weak relative strength is exactly why the overall score lands at 59.6, a neutral grade rather than a clean signal. Retail is heavily long here at 72%, more aggressively so than top accounts at 67.6 and top positions at 59. Long volume also outweighs short volume over the last 4 hours. That kind of lopsided long exposure is exactly what fuels a long squeeze if price slips. Crowded longs get pressured first on any dip toward support. The most probable path right now is a push into that 1887 wall, since it's the closest, biggest pool and lines up with the 0.618 fib and the daily gap overhead. If that sweep fails and sellers take control, look for a slide back toward the 1855 support and its matching liquidity pool. That's the fade the sweep scenario built into the data. If buyers actually hold above 8760 and 1898, the next magnet becomes that 4-hour gap near 1899. Either way, remember this is an alt that largely takes its cues from Bitcoin. A clean setup here can get overridden fast by a Bitcoin liquidity sweep, so that picture needs checking before leaning either way. The bullish case builds on acceptance above 1887 and 1898, with invalidation back below the 1855 support. That's where the long thesis breaks. The bearish case is a rejection at the current wall and fib confluence, targeting the support cluster near 1855 and 1846, invalidated by a strong reclaim of 1898. Neither side has confirmation yet. This is a level to watch react, not chase. So Ether sits right at a decision point, wedged between a fib level, a VWAP anchor, and the biggest liquidity wall on the board. Whichever side actually takes that pool probably sets the tone for the next stretch. If this kind of layered read helps, drop a like and subscribe, and know that Quantreef runs this same 9-layer structure, probability, and liquidity breakdown across more than 100 coins, with a 7-day trial at quantreef.com. And as always, this is for educational purposes only, not financial advice.